Welcome to Chain Train. Today we dive into groundbreaking developments in crypto. India arrests a Russian national linked to a $152 billion laundering scheme, while its intelligence agency warns of crypto's role in illicit financing. Binance secures a historic $2 billion investment. JPMorgan CEO Jamie Dimon maintains crypto skepticism. Despite Trump's support, Japan updates crypto regulations, and Tether's CEO embarks on a goodwill tour. Stay tuned for all the latest insights in the scheme. India's Central Bureau of Investigation has arrested Russian resident and Lithuanian national Aleksej Besciokov, wanted by the US for his alleged role in a $152 billion cryptocurrency money laundering scheme. Besciokov, an administrator of the Russian crypto exchange Garantex, was charged with money laundering, violating sanctions, and running an unlicensed money transmitting business. The U.S. Justice Department said Garantex processed at least $96 billion in criminal proceeds linked to hacking, ransomware terrorism, and drug trafficking. Another Russian national, Alexander Miraserda, was also charged. Besciokov was arrested in Kerala while allegedly planning to flee India. The U.S. is expected to seek his extradition. Authorities have seized Garantex's website domains, obtained copies of its servers, and frozen over $26 million in illicit funds. Besciokov faces up to 20 years in prison for conspiracy and money laundering charges. India's Financial Intelligence Unit suspects cryptocurrency is being used for terrorist financing, cybercrime, narcotics trafficking, and illegal betting. A 2023 to 24 report based on suspicious transaction reports flagged high-volume crypto transactions linked to secessionist activities and money laundering via offshore exchanges. Mule accounts using VPNs were identified as laundering cybercrime funds. The FIU shared intelligence with agencies like the EDCBI and Income Tax Department, leading to enforcement actions in some cases. Cryptocurrencies like Bitcoin Tron and USDT TRC20 were widely used due to their stability. While crypto remains legal in India, it is taxed at 30% and exchanges must register with the FIU under anti-money laundering laws. India is formulating a regulatory framework to address these risks. Authorities also warned of pump and dump scams and illegal forex trading. The FIU emphasized that these trends are based on suspicion but have national security implications. Nebraska Governor Jim Pillen signed LB 609 into law, establishing the Controllable Electronic Record Fraud Prevention Act to combat cryptocurrency fraud. The bipartisan bill, supported by law enforcement, aims to protect users of cryptocurrency kiosks and ATMs from scams. Governor Pillen emphasized Nebraska's commitment to becoming a crypto leader while ensuring safeguards against financial exploitation. Nebraska Department of Banking Director Kelly Lammers highlighted the need for transparency to support legal crypto businesses while cracking down on fraudsters misusing crypto ATMs. The law strengthens oversight to protect Nebraskans' financial interests. Japan's Financial Services Agency has submitted a bill to update the Payment Services Act, introducing key changes for stablecoins and crypto. The bill allows trust-style stablecoins to hold up to 50% of reserves in government bonds or term deposits while maintaining one-to-one backing. It also enables regulators to mandate onshore custody of spot crypto and stablecoins for bankruptcy protection. Additionally, a new intermediary class will be created to introduce clients to crypto exchanges without requiring full exchange registration. These intermediaries must disclose risks but won't hold client funds. The move follows Japan's past crypto exchange collapses, reinforcing its regulatory framework. Tether CEO Paolo Ardoino is making his first U.S. visit amid long-standing scrutiny over the stablecoin's reserves and alleged criminal use. His trip included a stop in Washington during President Donald Trump's Digital Asset Summit. Tether has consistently denied accusations of money laundering and terrorist financing. Under Trump's administration, a more crypto-friendly regulatory approach has emerged, with lawsuits against several crypto firms being dropped since January. JPMorgan CEO Jamie Dimon remains a Bitcoin skeptic, despite former President Trump suggesting a shift in his stance. Dimon has criticized Bitcoin's lack of intrinsic value and its association with criminal activity, but supports blockchain technology. JPMorgan, however, holds stakes in Bitcoin ETFs. Trump's crypto-friendly stance contrasts with Dimon's skepticism. Meanwhile, Bitcoin trades at $8,178, up 1.92%. The US banking sector is at a turning point as regulators consider allowing banks to own cryptocurrencies. The OCC's interpretive letter 1183, March 2025, reaffirmed that banks can offer crypto services, but direct ownership remains a gray area. Banks argue that their expertise in risk management and regulation can bring stability to the volatile crypto market, especially after collapses like FTX. They could also unlock new revenue streams through custody trading and crypto-backed products. However, regulatory clarity is needed to resolve contradictions between agencies like the OCC, FDIC, and Federal Reserve. Banks' involvement could modernize finance, enhance cross-border payments with stablecoins, and prevent fintech firms from dominating the space. The push for clearer regulations is critical for banks to fully integrate digital assets while ensuring financial stability. That's a wrap for today's episode of Chain Train. From India's crypto crackdown to Binance's historic $2 billion investment, the crypto world is evolving fast. With shifting regulations, high-profile arrests, and institutional adoption, the road ahead is both exciting and unpredictable. Stay tuned for more updates on the latest in blockchain DeFi and digital assets. Don't forget to subscribe, and we'll see you next time on Chain Train.